Hello, everyone. This is Jordan. Welcome back to the Daily Gold YouTube channel. And for those who are new, welcome to the Daily Gold YouTube channel. This video is being recorded on the evening of Wednesday, September 10th, 2025. I hope you're having a good week so far. In this video, I'm going to show you some of my absolute best and favorite charts. I think these are some of my best charts. And so these are analog charts. We're looking at history with respect to gold and silver and applying it to today. So we're looking at cyclical bull markets in gold and silver, also how they perform after breaks out to a new all-time high. So we're applying that to the moves today. And that gives us a sense of potentially how far the current moves can go. And it can also tell us if we're a little too extended, if we're based on history, if we're too far ahead of where we should be, or maybe if we're lagging history a bit. So let me get to these charts. Let me show you these charts and add my commentary. So first one, we have a simple gold bull analog. So we're looking at the 4 best cyclical bull markets in gold. And there's clearly 4 because there's 2 in the 2 secular bull markets of the past. So you have 70 to 74, 76 to 80, 2008 to 11, and then also 2005 to 2008. I need to add 2008 in there. And also, this is on the scale of the current move, which began in October 2023. Now, this is important. There's different ways you can construct these analogs, but what I'm looking for is the impulsive moves in gold. So I'm not just selecting gold when it made a specific bottom. I'm looking at when did the move really begin in an impulsive fashion? When did gold stop rising? And it really didn't stop. And so that's why I selected October 2023 and not 2022. And I did the same with these specific moves. Now, 70 to 74, this move here, that's one where I could have actually made it 71 to 74. So I will mention that. But that aside, it's all on the scale of the current move that began in October 2023. And that's in black here. And what's interesting to me is how you can clearly see, you can see with my mouse here, there is a clear trend for all 4 of these moves. I'm going to show you the average in another chart, but we can notice the clear, steady trend here. Now, this is a log chart, so this is percentage. So a steady move on a log chart, that's really good. That's really bullish. But we can see here, there's a steady move here, and the 1970s moves, this is what happened. You can see here, these really kept running. They kind of went parabolic at the end, and I shouldn't say kind of, they really did, both of them, 70 to 74, and also 76 to 80. And then the moves in the 2000s, they stopped here, which is this one, I believe, is about $4,800 an ounce. This one is $4,600 an ounce. And if we look at the average, which we'll see in the next chart, the average right here is about 5,000. So what this chart tells us is gold can continue to steadily rise to this point and maybe hit 5,000, the average. That in August of 2026, that's 11 months from now. So that's still, it sounds like a lot, but that's still a steady move and a continuation from where we are now. But that being said, and you'll see in the next slide, we are a little bit extended as we were in April here. So at present, a little bit extended. Now, the question based on this, is this cyclical bull move going to stop here, like these 2 in the 2000s, or is it going to act more like the 70s? Well, given that this is the second biggest breakout of all time, this move should clearly be more than these 2 right here. It should be longer and it should go farther. So I don't think the cyclical move is going to top out at 5,000. I'm expecting it to top out, and not even in 2027. My view is we'll probably see it top out maybe 2029, late 2028. Those are just guesses. We can change as we get more data with history, but that's where I see this move going based on this chart. Now, here is the average. So it's great to look at this, the average on this chart versus the last chart. Once you have too many lines, it's visually difficult to see. And one thing I want to point out with the average, if you go back and look at this, so the average actually stops here, right around 5,000. So that's August of 2026. That's right about right here where the average stops, because 2 of the 4, those moves were over. Now, what I did was I continued those 2 moves, even though they were going down, along with the 2 that went parabolic. And this is how that average would finish. So the average here in 2027, this actually comes up to $7,400 an ounce right here. The average, again, when the two weaker moves peaked, that's 5,000 right here. And here and now we can see this move has done a good job of hugging the average. Now, recently, it's been more than the average. And I think that makes sense because, again, going back, this move started with the second biggest breakout of all time, a breakout to new all-time highs from the 13-year cup and handle pattern. And so this should be stronger than the average. And so this is where we are here and now. But we can see here what happened in April. We were quite a ways above the average, and then gold is consolidated. It's broken out again. Maybe it'll continue up to the measured upside targets, 37.50 and also 39.50. Maybe it continues up like this, and then we get that correction and it comes back down to the average. But nevertheless, this is still a really bullish chart. I mean, can you think of $5,000 12 months from now, basically 11 months from now? That's the average. And then you have this potential, how this could end. That's really exciting. Now, one more chart for gold. This is the all-time high breakout analog, which I've shown quite a bit. And so we're plotting the three major moves. Well, let me go back for a second. Gold broke out to a new all-time high 3 times in its history. So we have 72, 2009, and also 1978. Now, the 1978 to 1980 move, that move went way off the chart. That move went like this, and it went parabolic like that. Now, we're too early in the bull market to see a parabolic move like that. So I removed that, but I added in 2005. Although this was not a breakout to new all-time highs, this was the third biggest breakout of all time, behind 72 and the current one. So I added 2005, and you can see here, and I've constructed a couple different averages. So this one right here is an average of all three, 72, 2009, 2005. And the average of those three, that stops at 6,000 in early 2027. So this is close to 6,000 about 18 months from now. Now, if we look at an average of 1972 to 2009, and that's this one right here, and then because 2009 ends right here. So we look at the average, but then 2009 ends. And so at this point, we replace it with 2005. So it starts out 72 in 2009, and then we replace it with 72 in 2005. And that's the stronger move right here. And that gets to $6,700 an ounce, October of 2026. So that's 13 or 14 months from now. So these are really, and then you have, if we just follow 2005, which again, huge breakout, but didn't go to new all-time highs, so you don't have that momentum. When you have a big breakout, but you're not at new all-time highs, there's still supply. There's still sellers. New all-time highs are so bullish because there's no sellers. Everybody who's bought owns a profit. When you own a profit, you tend to hold. So that explains that. But even if we just followed that, the 2005 breakout, that's nearly 5,000, again, 13 months from now. So this is just following history. And then, okay, this is the 74, this is the 70, or no, the 1972 breakout to 1974 here. That we can see that's almost off the chart. Now, this is just guessing because this can change with time. But if we were to remove all these lines and just focus on the averages, you can see here where we are, the black line here, it has hugged these two averages, but then the two averages get further apart. So maybe we could, at some point, we'll get to this level here, call it 6,000 or 6,200 in 18 months, something like that. I mean, I like to be conservative, but this is just based on history. This is telling us how much upside we have. So it's a little scary to think we're probably, this probably is telling us we could come into some kind of a debt crisis in the next 18 months. Then you could see 6,000, maybe even see $7,000 gold in 2027. And again, that would not be misaligned with history. Okay, enough about gold. Let's talk about silver. So here we're looking at the silver bull analog, and I'm only showing the two averages because if you look at the 4 specific cyclical bulls in silver, they're on one chart, they're just too messy and we can't really see much. So here are two averages. The higher average is an average of the 4 moves, which they're the same 4 moves in gold. You have the 2 in the 70s and you have the 2 in the 2000s, 05 to 08, 08 to 11. So you look at all 4, that takes us to $109 an ounce in basically July of next year. I mean, that is July, August. What is that? 9 months from now? Okay, 10 months from now, $109 an ounce. I mean, that even seems a little extreme to me. But let's just remove the moonshot, the 77 to 80 move in silver. Let's remove that. That still puts us at $77, basically 10 months from now. And that's basically a double in silver. Now, going back here, we can see silver has lagged both averages, although it seems to be catching up here. So it is getting closer. And I'll show you the next chart, which gives some other projections, which are not quite as bullish. But so, yeah, if this were to lag, where would that take us 12 months, 10, 11, 12 months from now? Probably in the 60s. And we know $50, that's the key, because we know when silver breaks 50, it's going to fly. It's really going to surge that. And you see this on this chart because you can see this is probably where it's breaking 50 right here. Okay, so moving on, here is silver's performance after gold breaks out to new all-time high. So again, we're looking at 72, 78, I'm not showing that moonshot move, and 2009. Now, 78 is in one of the averages. So there's 2 averages here. You have the 3 instances, 72, 78, 2009, those gold breakouts, new all-time highs. Here's an average just looking at the 2 weaker ones, removing the strongest one. And then we show 1972 in blue, 2009 are in the dots, and the black is where we are here and now. Now, again, I removed the 78 to 80 move because that just went like this. It's off the scale. It just obfuscates the entire chart. But it is included in this average. And one thing I did with the averages, which I started to do, is I continued these even after the peaks in some of these data series. So if you're looking at before, the way I would do it, if I'm looking at 3 or 4 data series and you're looking at the peaks, you have to stop the average when there's the first peak. But so I was curious and I thought, okay, let me just continue the data and see where the average is. And so that's what we did with these lines here. Now, one of them is 2009. The dots are hard for me and the colors are hard for me to distinguish, but we can see here 2009 and then also the 2 averages. If we continue after the peaks, they're all at this point, $57, $61. And again, this is even sooner than I recall. This is February of 2026. So February 2026, that is 5 months from now. And here's 1972. And I just, on the current scale, and I just love, this is a perfect cup and handle here. Rallies up to 49.9, that $50 major resistance. Beautiful cup here, little handle, little pullback here, and then boom, it explodes. But okay, long story short, this is what I'm looking at. If silver can break 50, and that's what it all comes down to. If silver can break 50, then I think this is a potential target. Maybe it's a little bit too soon. Maybe it breaks, because based on this breaks 50 January or February, which again, that's 5 months away. So at some point next year, I do see silver breaking 50, and then it's going to make that move. Okay, one more chart. Let's get into one of my favorite charts, the junior silver stocks bull analog. Now, this chart and the data in these various series, there's some heavy survivorship bias in these indices, people. And what that means is we're not just taking the same silver stock and using it for this entire, or I should say, we're not just using the same 10 silver stocks and applying it for this entire period. Now, each specific period, we have data from 10 specific silver stocks. And there is survivorship bias because we're looking at 10 stocks that obviously performed very well during these various periods, and ones that weren't acquired and they were able to live on for several years or In some of these cases, 2016 and 2020, you can see right here, they didn't have to live on for several years, only several months. So here we are. Here's 2024. Let me go back a second. So 2001 to 2007, this is multiple data series put together. And so this basically did about 100x in a 6-year period. Now, right now, we are at 475. So can this go all the way up to 100x? I think it's possible, but the reality is, will the current index do that? Not necessarily. I think you can find 10 silver stocks that will make that 20x move up to this point. But who knows what they are? That's what we're trying to find at the Daily Gold Premium. But that's the reality. So this index, it's important to note, this isn't necessarily my 10 favorite silver companies or the 10 stocks I think are the best, but there are a few of those in there. So I want to make that clear. But the point of this chart is just to show you in a real bull market, in a secular bull market for gold and silver, this is what junior silver stocks can do. This is what they can do. And we've seen in other periods, this color here, this was 04 to 07. So that was up significantly. Here's 2008 to 2011 right here. So we are a little overbought at this point. I'd love to see a pullback. And I think if we pull back a little bit like this, that's going to be a really, really good buying opportunity in junior silver stocks. But the beauty of this is, even though we're extended here, you look at these right here, they tell us there's more to go. 2001, I don't know what, if this is 04, 05, that tells us there's more to go. And then this is what's possible. And so this move is possible because silver can break $50 and go to 100 in 12, 15, or 18 months after that breakout. So this move is possible in the next 3 or 4 years. So that's it for the video. Hope you enjoyed all these charts as much as I did. And leave a comment. Would love to hear from you. Let me know what you think. I love reading your comments. And thank you so much for your support. I really appreciate it. And I'll talk to you guys again in the next video, which will be our Friday weekly market recap. Hope you have a great rest of the week. Thank you.